Hey guys, I'm back. So there was a bit of a delay because of an eastern cold front. Because of the first war between states in Europe in, well, generations, I felt a little uncomfortable giving recommendations. But now that we have a week of data to go off of, I feel confident in making selections again. But first, relevant news. Oil broke $130 for the first time since 2008. Giving the world massive 2008 vibes without the nostalgia. Also, Russia invaded Ukraine. I don't know if you've heard that. Also, we've been suffering from what's been being called a bear market by some, with the S&P 500 down by nearly 7% in this last month. With the environment set, let's talk investments. Since oil is going up, I'm going to be what everyone in school tells you to be, a trend follower. So because of that, 3 of my 4 picks are going to be oil-related companies. The best of them is Transportadora de Gas del Sur S.A., or TGS. Also, please forgive my slaughtering of that pronunciation. So they're announcing on Wednesday their returns, and they've had a long storied history of beating their returns over the last year. That's also not to mention that they were beating these returns before the price of oil skyrocketed. So hint for anyone who's wondering at math, if they just do the same production that they did last quarter at $130 a barrel instead of what it was, which was a lot lower, they're going to make a lot more money. Also, they're in the business of transporting natural gas. And right now there's serious talks about Europe cutting off its dependency of natural gas from Russia while Europe is in an energy crisis. So if they're going to successfully do that, they need transportation companies like this one. So other good news is that their price to earning ratio is 11, which is ridiculously low. Now they are a bit of a departure from this channel's norms though. So this is going to be the first foreign company that I'm recommending. So this comes with some baggage. This may behave differently than other stocks. So this is an Argentinian-owned company. Not only that, but it was at one point owned by the state government. Now that was in the 90s, if my research is correct. So it hasn't been that way in a very long time. You do run the risk of investors not trusting privatized public corporations sometimes, and that could explain why the price to earning ratio is so low. There's also the problem of this is in Argentina, and Argentina may have very different fluctuations from the United States and global market that we're looking at. This is oil. Oil is a global commodity. So it's affected more by global markets than individual ones. So like, unless Argentina decides to seize the means of all production next week, we should be fine. If it does though, I'm taking a lot longer than a 1-week break. That might be like a month-long break. just out of shame. Next company I'm recommending is Sandridge. This is an Oklahoma-based oil and gas company. Their price earning ratio, as you can see, is 7.55, which is crazy again. They also have consistently beaten their financial reports over time, and they're expected to report this Wednesday. So honestly, with how oil and gas is going, I'd say it's a safe bet if you buy it today at a discounted price, so somewhere under 1.5% if you can swing it, because it's probably going to go up. But if it goes down by the end of the day and you get lucky, buy it, because it should go up by tomorrow. This final gas company I'm going to rank as the lowest. It has the greatest potential to grow by a lot. However, it's also, I would say, by far the least consistent out of all of these. Also, it just has the dumbest name, Smart as Sand. Like, I can respect the alliteration, but when I look at a rock, the first thing I think is not intelligence. I'm never looking at a rock and going, indubitably. Well, unless it's Dwayne "The Rock" Johnson, and that is only the first part. Reality though, I think it's a very low-cost stock, and for whatever reason at the moment, low-cost oil stocks have been blowing up. Husa did that, the Imperial Petroleum did that. So there's good potential for this to go up by a lot. Definitely with its financial reports, not as consistent or as safe as the other 2 companies, but there is good earning potential here. Speaking of following trends though, luxury products make the last stock category for today. So Ulta is reporting this Thursday and has consistently beaten its financial quarters over the last year or so during the pandemic. It's expected to beat its earnings come Thursday, and its price went down for no real good reason yesterday, which means that it is the perfect time to buy low and turn around and sell high. Its price to earning ratio is higher than the other ones. It's at 23.13, so it is technically overinflated. However, with the pandemic stocks, it's kind of become the norm for it to become overinflated. So with its earning reports, you're looking at it going up at least by the end of Thursday, probably into Friday, but definitely sell it by Monday. Those are the picks for the week. Transportadora de Gas de la Sur, Sandridge Energy, Ulta, and Smart Sand. Oily, chemically weak, following the coattails of Putin. It's a My Bad Chemical Romance joke in there somewhere. Guys, remember, it's okay to be confused, but keep learning.